So I see that Esther Duflo has joined us, and also Isabel Schnabel is with us, as well as the president of the ECB and several other board members. So we are basically gearing up for the keynote lecture, and I hand over to Isabel.
Thank you very much, Luc. I hope you can hear me well. Yes, better than last year. I remember last year on the same occasion we were having some technical trouble, so it seems that we are learning. We are getting better. So good afternoon to everybody. It's my great pleasure to welcome you all to the Jean Monnet Lecture, which is actually the highlight of the ECB's Annual Research Conference. So every year this lecture is delivered by an outstanding economist on a topic of relevance for strengthening the European Monetary Union. But as we all know, the success of European integration requires more than tackling problems that are specific to Europe. We must confront global challenges, as the COVID-19 pandemic has once again brought to the fore. And I guess no one knows this better than this year's Jean Monnet lecturer. Esther Duflo is a professor at the economics department at MIT and a co-founder and co-director of the Abdul Latif Jamil Poverty Action Lab. She is, as we all know, the recipient, together with Abhijit Banerjee and Michael Kremer, of the 2019 Sveriges Riksbank Prize in Economic Sciences in memory of Alfred Nobel. She's also a winner of the John Bates Clark Medal and the current editor of the American Economic Review. We could not have thought of a more distinguished speaker to deliver this year's Jean Monnet Lecture. Esther's research is as closely connected with policy as it can be. She has worked on numerous highly relevant policy issues related to a wide range of topics, including health, education, financial inclusion, governance, and the environment, with a particular focus on policies aimed at alleviating poverty. Her research serves as a poignant example of how analytical tools employed by economists, and in particular field experiments, can be used for the public good by helping to evaluate and design economic policies. And in her distinguished lecture to the American Economic Association, Esther promoted the role of the economist as plumber, appealing to economists' responsibility when consulting governments. And in particular, she advocated that economists should engage with all the little details needed for policy implementation in the interest of both society, but also our discipline. This, however, requires economists to step out of the ivory tower and get involved with the complexities of actual institutions and actual behavior. And she reminded us that what looks small in theory may matter greatly in practice. And this is actually what a large part of Esther's work, which has been so influential in our profession, has been about. Exploring real-world problems in detail based on a sound theoretical underpinning and state-of-the-art empirical setups. And therefore, we are so happy to have you here for our lecture today. And I'm delighted that Esther will talk today about her most recent book, co-authored by Abhijit Banerjee, entitled Good Economics for Hard Times, which has already won several Best Book awards. The book discusses how to design policies for the greatest global societal challenges that we are facing, like immigration, inequality, globalization, digitalization, and climate change, making the best use of economic reasoning. So the talk will last about 45 minutes, and I hope we will have time for questions for another 15 minutes. So if any of you in the audience has a question, please send it to me via the chat function, and I will then pose your questions during the Q&A session. So Esther, we are very much looking forward to your presentation. Thanks for being with us, and the floor is yours.
have to unmute. Thank you so very much, Isabel. May I share slides? It seems that
you should be able to share.
Okay. I have to. Oops. It shows that I'm able to share, but my computer claims that no.
You want to send them to us and we try?
Quickly email them.
Yeah. Otherwise, I'll have to. Yes, I think that's the easiest.
So can you send them to Anna Maria?
Otherwise, I have to, I think, get out for 1 minute and come back. I don't know what's easier.
As you wish, you can email them to me. And
Yeah, I just emailed them. So you have them and I can just say next. Maybe that's...
Yeah, I think that's very good. So just give us 2 minutes and I'm sure the slides will show up.
Well, in these 2 minutes, let me take the opportunity to thank you very much for inviting me for this lecture. I'm really deeply honored and also very happy to have this opportunity to talk to you in times that I think are in some sense more hopeful, but also more troubling in many ways than perhaps at any point during the pandemic. And as you know, or as you may know, the book Good Economic for Hard Time was published in November 2019. And at the time, we felt that there were many points, many subjects where we were heading towards crises that needed to be addressed immediately, and that were becoming very difficult to address because as societies in both in developed and developing world, we find it increasingly difficult to structure a political and a social conversation that allows us to tackle the challenges that requires cooperation between us humans. And climate change is one of them. Rising inequality, the tension surrounding globalization are others. Of course, after November 2019, the times became much harder. And it was a little bit weirdly ironical because as economists, Abhijit Banerjee and I made a little bit of a career making fun of the propensity of economists to make predictions and to find that these predictions were never really materialized in fact. And there we were titling on the hard times, and the times became so much harder than we could have possibly envisioned. But of course, they became harder in a way that we could not have envisioned and had not envisioned. And in particular, in the very early days of the pandemic, I remember watching a very old show with my children about the flu. This was a show that was recorded around the sort of the big flu pandemic that was not. But where, if you remember, we were very worried that there might be H1N1 epidemic. And the doctors interviewed explained how it was not a matter of if, it was a matter of when, and the specifics of how a flu pandemic would happen and what would need to be done. And of course, it was not a flu pandemic, it was a coronavirus pandemic. But other than that, what was really striking, and I think what was a very good illustration of what really limits us as humans in dealing with a lot of our issues is our very strong propensity to suffer from projection bias, which is we tend to think that whatever is now is going to be in the future. And that is something that has prevented us, meaning me and my husband, as well as us as societies, to take seriously the possibility of a pandemic when it was obvious. And similarly, it is the same incapacity that makes it very difficult for us as societies to think about the climate change in a effective way, or even to take decisive action for the vaccination of the world, which should have been done months ago, as soon as the vaccines became available, and would have avoided what we are now facing, which is a pandemic that is slowly escaping our control. Now, if you have the slides, you can start. You can start them.
Fortunately, I haven't received them.
Okay, why don't I continue without slides, actually, if that's okay, or I can get out and come back for a minute. This is up to you. I think I need to my system. So then I'll just get out and come back for a minute. My system wants, for some, even though it claims to be registered, it claims to allow me to share, but then it doesn't. So I can quit and come back. Okay, so I'll do that. I'll get out and come back up.
So just to remind you, you can also during the talk, you can send me questions anytime. You don't have to wait until the end of the presentation. But let's first hope for the presentation. Very good, you're back. Oh, that looks fantastic.
Perfect, we can see them.
So in some sense, many of the important issues today are core economic issues. That's true of the pandemic, of course, but that's true of dealing with Brexit, that's true of inequality, that's true of climate change, that's true of racism and discrimination. So you would think that economists would be at the forefront of a lot of this conversation, but as it turns out, they are not, because economists have lost most of their credibility. This is a a poll that was taken by YouGov in 2017. We took something similar in 2018, and I don't think it has changed much since then, where people were asked which of the different professions they trust about their own field of expertise. And this poll found that people trust nurses and doctors. That's still true today. But they don't trust politicians at all. And only second to last as a categories are economists. 25% of people trust economists about economics. And of course, that's only about half the trust in weather forecasters. So that's to say that even though a lot of the decisions that we face would potentially benefit from an economics discussion, economists are hardly part of this conversation. And that is one reason which makes it difficult to have intelligent conversation about these issues. So, but why is it the case? First of all, people disagree with economists on most core issues. One of them is trade, for example, where when we did a survey in 2018 of about 10,000 Americans. At the time, there was a discussion from the Trump administration about possibly imposing tariffs on steel and aluminum. And so the question we asked was whether people thought that it would improve American well-being. 33% of people said yes, it might. And around the same time, the exact same question, that's why we chose the phrasing in this way, was asked from a panel of prominent economists, all professors at top economics departments around the country. And exactly 0 of them, 0%, thought that this would be something that would ameliorate well-being of the average person. So there is a huge disconnect. And the disconnect doesn't come from people not knowing what economists have to say. Because even when they are informed of what economists believe, they continue to think what they think. And this illustration is for, I chose to illustrate a very interesting study from the University of Chicago Business School, where they asked people what, in their opinion, was one of the most effective tools to fight climate change. Most people, and in particular, two of the options were carbon taxes, or some form of pricing on carbon, as well as mandates that would, for example, preclude manufacturers from producing cars with not very good fuel efficiency. And most people thought that carbon taxes were not an effective tool to fight climate change, and that mandates were a much more effective tools. If you do ask economists, of course, as you know, probably by introspection, since many of you are economists love carbon taxes. They think that it's an efficient tool, that it will align the incentives, and that it is really not the place of the policymakers to make all of the micro decisions of the manufacturers. You set up the price system right and everything will be fine. But so this is clearly not what people think. So what they did in this study is that they took half of the sample and they asked them just their opinion on what was the most effective tools, and that's the answer I gave you before. Most people think mandates would be great and carbon tax are not so good. And then they asked, then for half of the sample, they first told them that most economists think that carbon tax is a great way to fight climate change. And then they asked them the same question again. And the answer for the people who were told the answers of the economist was precisely the same as the answer of the sample who didn't get the priming from the economist. So in other words, it's not that people do not believe, it's not that people do not know what economists have to say. It's that they know it and they are just not interested. They don't share the opinion. And why is that? Well, in this particular instance, it's well summarized in what's on this T-shirt by a yellow jacket in front. It's to say the money for fighting climate change is in fiscal paradise, is not in the pocket of the proletariat. So what they think here, what they express here is the worry that a carbon tax is not going to be adequately redistributed, so the incidence would fall directly upon them. Whereas when economists think about the price, think about the carbon tax, they assume that the sharing is going to happen, the incidence is going to be corrected ex post via a set of transfers. And this sort of assumption, which is almost automatic on both ends, which really has to do with the trust in government and in government institutions, is what creates the difference. And it's something that economists have issues seeing, because in many cases, there is a lot of bewilderment of why are these people not believing us? Which simply is the reflect disconnect between what happens in our models, where this redistribution happens, versus what happens in reality, whereas it doesn't, or it doesn't in a way that is effectively perceived by people. In the case of the Yellow Vest movement, it is not accidental that what's prompted the Yellow Vest movement was a proposed hike on the price of gasoline due to a carbon tax, which came closely on the heel of repealing the wealth tax, or the high wealth tax, the tax on the tax impôt sur la fortune. So that means that it got amalgamated as something which was a way of changing the overall form of the tax burden in a way that was unacceptable. So why are people so mistrustful of economists? Well, maybe we shouldn't be too surprising. The first one is that most people see economists primarily as people who are making a prediction. And in the European Central Bank, I'm sure you have a great team of excellent forecasters. There is a very interesting study from the IMF that compares the prediction made by the IMF forecasting team to what happens in reality in the run-ups to recessions. So this is a summary. This is like a compilation of the prediction on the right-hand side of the graph of the prediction of the IMF forecast team in April T-1 of the recession year. They still predict 3% growth, so they had not seen the recession coming. 6 months before the recession, they still hadn't seen it coming. Well into the recession, they still really understated. And then by the time of we are already in October, so 3 quarters into the recession, they are still below the actual growth for these recession years. And just to make sure that it's not the IMF who is particularly bad at this job, the consensus of forecasters is equally bad. So people are just not, the IMF is just not very good at forecasting. Because, well, forecasting is difficult, particularly the future, as the joke was. And in fact, John Kenneth Galbraith quipped that the only function of economic forecasting is to make astrology look respectable. So I don't mean by that we should stop doing forecasting, because we have to put our best foot forward somehow. I'm just saying that because most people think that economists are forecasters primarily, then since they're so bad at it, then it's not surprising that they're considered to be worse at their job than weather forecasters, who have improved tremendously in the last several decades. Another reason is that to the extent economists go beyond forecasting, they're often seen by people as being wedded to a status quo, possibly due to a conflict of interest. And that's probably reflects the way that this time the academic economist profession, not the economists in international institutions or central banks, have behaved. If we think about Milton Friedman, for example, who could be described as the godfather of our profession in some sense, or one of the godfathers in our profession, tells us very clearly the social responsibility of business is to increase its profits. And once you've said that, then you've sort of placed economics in a particular ideological tradition, which a lot of people are not fully subscribing to. Just to say that it's not something that is necessarily hugely changed, or at least the perception of it has not hugely changed. During the Black Lives Matter movement, there was a prominent economist, the editor of a top academic journal, that started tweeting about, some dismissing comments reflecting a very sort of caricatural economist point of view. This was, of course, a white male, and this called attention on the fact that the economist profession is pretty much dominated by white males, and therefore it might be a little bit out of tune with the reality that people experience in their lives. So that's all a little bit depressing. So you could say, well, we are not for this world. This is a pandemic world. We need epidemiologists, vaccine scientists, psychologists, sociologists, maybe economists have not much to say. And yet, I would summarize that economists has something to bring to the table. And I should note that there has been a huge rush of COVID-19 research. As soon as the pandemic was arrived, people went home from their offices in March of 2020, and this, switched their entire research agenda to think about various aspects of the COVID-19 pandemic. So there is a huge desire of the profession to be in touch. Whether or not this was always relevant and useful, their work, I'm not going to say that it was always relevant, but at least there is an effort. Similarly, contrary to the perception that came to the fore in the wake of that scandal with the editor of the academic journal, there is actually a lot of research in economics on topic of interest, on important topics, on climate change, on racism and discrimination. But this is research that tends to live in academic journals and doesn't necessarily get the much play either in media or in social media, because it is not, it's a little bit quiet. It is not as necessarily categorical and clear in its prescription. There might be contradiction and might be things that we don't fully know, and therefore it doesn't have, it doesn't necessarily lend itself to the one-line Twitter type of things that Milton Friedman, even though he was from before the era of Twitter, was very well suited for. So that's kind of why we decided to write this book. That's why we decided to become, active during the COVID pandemic, both in doing relevant research, some of which I'm going to show you in a few minutes, and also speaking up for, what the profession has to say. And this is not something we are doing for us. This is something we are doing to reflect the state of the academic economist profession as I see it today. Sometimes people ask us whether we are, we are at odds with the profession because we are so much oriented on more empirical research and more micro research. And I say, not at all. We are not at odds with the profession. We are just representing what is being done today in many of the departments of international institutions, central banks, and academic departments. So today, I very briefly want to extract 5 lessons which are cross-cutting from the book. None of them is said in so many words in the book, but which are cross-cutting from our work and that we've seen sort of in action during the pandemic, and that I think we need to keep in mind as we negotiate the months ahead. The first one is about the legitimacy of the government. So as I mentioned when I showed the trust in the economists, the people who are even less trusted than economists are politicians and policymakers. This is something that's an OECD-wide phenomenon, a decline in the trust of governments since the early 2000s and in fact even before, reaching a low of 35.7% of people reporting confidence in the national government. Where is it coming from? Well, in part because it's fairly easy to treat the government as a punching bag, and it very easily happened. For example, during the Obamacare, during demonstration against Obamacare, now in what seems an eternity ago, perhaps, you could see posters like "Keep government out of my Medicare." Which was funny because Medicare is a government program, so it could hardly be kept out of it. But that really reflected this idea that the government is always bad at doing whatever it is that it's doing, and it's interfering, and it's not doing it well. But what it is forgetting is that a government intervenes precisely when problems are becoming too difficult for individual companies or for individual people to take care of them themselves. For example, government intervene to allocate scarce goods, ventilators in hospitals, seats in prestigious programs in universities, or the government also introduced to intervenes to tell us to do things that we don't particularly want to do but are important for a society. And we tend to forget that if you intervene in these circumstances, then people are going to resent you necessarily, because you're kind of going against the grain. You're trying to do something which doesn't happen naturally, because if it happened naturally, the market could take care of it. And that means that every time the government intervenes, there is going to be a will against it and an effort to subvert it. Hence, corruption and issues like that. There are more corruption scandals in governments than in private firms, although they are not absent in private firms, but there are more corruption scandals in government than in private firms, because governments are trying to do something which is more difficult. And in fact, as soon as private firms are trying to do things that have some element of these difficulties, the corruption scandals rear their head again. To give you the most recent example, Deutsche Bank is just into a huge amount of flack for corruption in the management of their ESG portfolio. And this is exactly that, which is there is an effort to allocate monies to investment not exclusively based on profit. And when that happens, there is necessarily a temptation to try to deviate away from what would be socially optimal in order to make money. And this is exactly what we're seeing in this instance. So the COVID-19 crisis, I think, has reminded us very powerfully why we need governments. You cannot only governments, local governments at a minimum, but it works better when this is a national government, can impose a mandate to shut down your business, to wear a mask, to get vaccinated in some circumstances, and so on and so forth. You need a strong government to make that happen, because this is, against your individual liberty for the good of everyone. This is a typical place of a government. But you also need government to fund vaccine development or purchase vaccines. You need governments to allocate the priorities for who gets the vaccines now. Are we going for third doses? Are we going for children? Are we going for the rest of the world? This is not the individual who can make these decisions. This is the society as a whole through its government. And only government, of course, in particular in Europe, even the transnational governments, were in a position to keep the economy afloat during the pandemic. And of course, sitting at the European Central Bank, you know that much, much, much better than me, and played a key role in making that happen. And in fact, government plays such an important role, and this is reflected in the fact that the trust in government is very strongly correlated with success against COVID-19. Where trust in government is high, the COVID-19 pandemic was better treated, and vice versa. So we are at some level in an interesting make or break moment, because we are at a moment where governments can show themselves to be powerful and effective in fighting the pandemic and getting us over to the right side. We might also at a moment where government can show themselves as being overbearing and taking liberties away. And this is a picture for a demonstration in the US, but of course you are having today exactly that tension in France apropos vaccination, let's say encouragement if it's not mandates, where you're seeing some people demonstrating against, and while some people are happy with government steering collective action, and the overall trust in government is going to depend a little bit or a lot in what happens finally to both the mandate and to the COVID-19 waves in France in the coming month. The second lesson is that financial incentives are overrated. So what do I mean by that? Well, in economic models, as you know, financial incentives make everything tick. This is how everything works. People work because they are paid. If the taxes are higher, they work less. If the transfer are higher, they work also less because they don't need to work as much. Well, it turns out that this is something that is very powerful, both in the model, but also in the view of policymakers, which are always very chary of having too generous social redistribution programs, because they're worried that it's going to blunt incentives and people are going to stop working. Well, we now have a lot of experience from quite generous redistribution program through the conditional cash transfer program in many middle-income countries. And here I'm showing you evidence from randomized control trials that compare a treatment group that got this type of programs to control groups that didn't. And all these programs are conditional on sending kids to school and getting vaccines and things like that, but not on working. So in standard economic model, the income effect would kick in and people would stop working or work less. And what you can see from this graph is that the gray bar and the red bar are just as high. And that's because people didn't stop working when they got the transfers. And that is something which is found again and again and again, and was found again during the pandemic, when both in Europe and in the US, very generous replacement systems were put in place. In the US, through the unemployment benefit system, which was so generous that it ended up often being providing a replacement rate above 1, which means that people would make more money in unemployment than if they worked. So many economists were very interested by this program and started looking at whether people stopped working when the replacement rate was more generous. And what you're seeing from this graph is the result from one of the studies that shows that it's absolutely not the case, which is that in places where the replacement rate was much higher, which is the red places, work level were lower because that's why the replacement rate is higher. But if anything, you're seeing the rate of work to actually converge to the places which are richer and had a lower replacement rate. So there was absolutely no evidence. This is one of 6 studies that looked at the CARES program in details, showing no impact. Now, this is a particular special program because people knew that it was absolutely temporary and that it would have made very little sense to stop working and then maybe find it difficult to find a job afterwards. But I think more generally, it shows that people are quite keen to continue working if they can. And yet, this is something, so a message that just even apropos CARES could not go through some of the politicians. For example, as soon as the CARES program was put in place, Chuck Grassley, who was then the finance committee chairman, started opposing them, saying that they are going to slow the recovery, people are going to stop working. And the Wall Street Journal actually had a whole opinion column editorial showing how, claiming it was economist versus common sense. So showing actually discussing the study that I showed you the graph for and saying the study must be wrong because my intuition goes in the opposite. So the Wall Street Journal saying, you have my fact, I have my theory. If your fact doesn't accord to my theory, it must be my theory that is correct. And that is something which is, you find again and again, as people are so strongly, have opinions that are so strongly held that it's very difficult to make them change their mind, even in front even when confronted with facts. The third lesson is that the economy is sticky. What do I mean by that? Well, another thing that makes economy tick, both the real economy and the economic model, is precisely that in response to changes in economic incentives, to changes in economic situation, people find it necessary to move about. So, for example, if you are making furniture in North Carolina and lose your job because of competition with China, then maybe you can move to New York, where there is a furniture store where you can get a job as a security guard because furniture has become so much cheaper that a lot of people buy furniture. So some jobs are lost, some jobs are gained, and people sort of move from place to place to take advantage of these discrepancies. But the reality is that people just are not that mobile anymore. And within the US, this is particularly striking. Since 1948, mobility from county to county has been divided by 2. And a lot of this change was from the 1990s, which is precisely when the shock of the trade with China happened. So precisely when you would have seen the maximum amount of geographic churn is what you're seeing the least. And of course, that has become, that mobility has become even more hampered by the pandemic. Of course, international migration has been severely restricted and still is. European, for example, from the Schengen area can still not go to the US for a visa or for work. Within the developing countries, the lockdowns have been extremely blunt and extremely rapid, which has also put a stop on internal migration, which is a force that, again, in developing countries is not as strong as you would expect, but still plays a key role in reallocating people from countryside where there is very little to do to cities where there is much more to do. And this is a photo from India taken in the early day of the pandemic, where people had to come home because they suddenly, in a matter of hours, lost their job, their place to live, and any right to financial aid from the government because it was tied to their place of origin. So all these people left, often by foot because the train had been stopped. Many died on the way and or had an absolutely horrendous journey, with the result that when the restriction lifted later in that summer, most of them didn't want to go back. And employers found it very difficult to find people to be willing to work for them again. And it's not because of generous unemployment insurance. It's because people didn't want to go through this again. And that made me, all of this, both the international migration, which is going to remain restricted as long as people are not vaccinated in the rest of the world, because developed economies are going to be very chary of letting unvaccinated people in. And the internal migration, simply because people will be even more reluctant than before to take the risk of leaving everything behind. The fourth lesson is that what we take as given for people preferences not only are often a little bit wrong, this description I was telling you, that people are not driven primarily by money, but also maybe even more fundamentally are less strictly held than we think. So Becker and Stigler famously wrote an article called De Gustibus non est disputandum, taking from a Latin and then French a book saying basically you can't discuss tastes. This is what it is. We should take it as given and understand how people behave within the context of their particular tastes. Of course, one of the tastes might be the taste for discrimination, and so this idea that you don't you have to take people preferences as given as far as their opposition to other races, for example, is concerned, becomes really critical in today's world. The pandemic has put racial inequality into focus because the death rates were so different across races and still are, where Black people were much more likely to die from the COVID-19 pandemic than white people. Of course, following the death of George Floyd, there was a massive demonstration in the US, which sort of prompted a national conversation about racism. Then the racist element was obvious in the Capitol attack on January 6. It's a little bit swept under the rug, but it's difficult to ignore the fact that some people like this gentleman were carrying Confederate flag inside the Capitol building. So is it something that we need to just live with and say this is the preferences of people and we just need to adjust to it? Or is it something that is actually maybe the product of a particular environment and could be changed with the right environment, the right education, etc.? And a lot of research in psychology, in sociology tells us that our tastes are actually much more fickle than we think. They are much more influenced by others than we give it credit for. and sometimes we don't even know what we want. But to give you an illustration of the fact that this racism that we see is probably more the product of how the system aggregates individual lives and preferences than every single person having strong views. I want to give you an example from research we did on COVID-19. So immediately starting with the pandemic, we started a big agenda on research in COVID-19 with many of my colleagues and with Center for Diversity and Inclusion at MGH. And we did a series of studies where doctors, for example, this one, black and white doctors, delivered messages about COVID-19. So at the beginning, it was about mask wearing, and then it culminated in a large study on urging people not to travel for Facebook and for Thanksgiving and Christmas, which we did with Facebook and was sent to 30 million Facebook subscribers. And what we found in this study is that people, regardless of their political opinions, are sensitive to simple messages conveyed by doctors. So if you remember, people trust doctors. And they don't trust only their own doctors, they trust doctors in general. And when doctor tells them, for example, some facts about COVID-19, they listen and they are able to change their change their opinion on this fact. They're also more likely to change their behavior. And in particular, we found that when they receive these short videos from doctors urging them not to travel at Thanksgiving and Christmas, they travel less, much less, 20% less. And there was 2 weeks later an impact of about 4% reduction in COVID-19 cases. So people listen, and importantly, Republican and Democrats are just as likely to listen, both at the individual level and also looking by county. The Republican county have as large an effect as the Democratic county. So this is not something we necessarily expected, but it shows us that people actually are capable to listen. The problem and the reason why they have different opinion in the first place is that they don't get exposed to those messages at all. But if they get exposed, they understand them, they appreciate them, they react to them. The last message, and I'll stop on that, is perhaps an exception to this idea that people's preferences are not so strong, which I will sort of summarize under the banner that dignity matters. This one thing that people deeply care about is their dignity, is living a dignified life. And that is something that you're finding both in developed countries and in developing countries. That is something that people, that is the most important for people. And what people feel now often is that the world operates in a way that if you are poor, your dignity is not respected. So this expressed, this get expressed in ways that are not particularly elegant, like when people blasted Mitch McConnell kills the poor on his door. But it reflects something which is actually real, which is, for example, in the US, the life expectancy is very different for rich and poor people. The life expectancy for someone who is making $2 million a year, so some of the richest people in America, is 86 years if they reach 60, if they reach 40. For men and for women, it's well above 85. Whereas if we go to someone who is at the 20th percentile, it's 77 years for men and 82 for women. And some of these deaths are the product of a bad and unequal healthcare system, but some of these deaths are also the product of what Anne Case and Angus Deaton have called deaths of despair, which is deaths by suicide, alcohol poisoning, opioid overdose, and so on and so forth, which you see have dramatically increased since the 2000s. As a result, they claim, and I largely subscribe to, of an existence which is basically robbed of the basic component of dignity, which is the assurance that your kids will do better than you, some amount of status coming from your job. So there are three opportunities and risks from the COVID crisis to act on this. The first one is we have had a complete overhaul of the social protection system. We've shown the social protection system to be capable, to be inclusive, to be generous, and everybody, or a lot of people, benefited from it. And this is a unique moment to use this opportunity to restructure it, to remove its punitive aspect, to transform it into something which is true social insurance. The second opportunity that I think we might have is to fight climate change. Because as I was saying before my slides come up, we live under this illusion of that the future is going to be exactly like the present. And the COVID-19 has taught us that it's not true, that sometimes the future is radically different from the present. And sometimes the catastrophe that the scientists say will happen do happen. And I think the moment where we just see it is really the ideal moment for people to become aware of the fact that we have to fight climate change now, before the catastrophe. They have already, of course, started happening, but accelerate in a way that it's a no return part. The last one, and I must say that I wrote it as an opportunity, but every day I'm adding a few more question marks here, is this would be a time where we would have had such a beautiful opportunity to demonstrate a shared destiny with the developing world, which would have placed us in a much better position to face the challenges that we'll face in the future, including climate change. We had the vaccines, we still have them. We just had to deliver them in the world in a fair way. And we haven't done it. And I cannot understand why not. When the IMF came up with a paper showing the economic benefits associated with it, which are absolutely tremendous, and when all of the international institutions went beyond it, it seemed so clear to me that the G7 would act on it, because it is, in a sense, easy. I know there are logistical issues, but we can handle them. They are relatively contained logistical issue. We are capable of dealing with that. But somehow it hasn't so far been a priority. It can still become a priority. I still very much hope it does, because this would be an opportunity to show that we are one planet, because we really are one planet. And what is really striking is the language is there, the words are being said, but the action haven't followed yet. And I really hope that they will very, very, very soon. Thank you so much. I'm sorry this leaves us a little less time for discussion, but this was a huge pleasure and an honor to have a chance to give this talk.
So thank you so much, Esther, for this this fascinating speech. And actually for your entire research agenda, which I think is really inspiring for all of us, incredibly important, and of course, let's say provocative. So I mean, some of your lessons are of course quite a challenge for economics, and I would probably say that, especially, I mean, if you say financial incentives are overrated, so would we also say that price signals are in general overrated, which of course would change many things, by the way, also for monetary policy. But on your final point, maybe on this aspect of global vaccination, there I sometimes think that it's not that we have too much economics, but really too little economics, in the sense that we are too much thinking of this as kind of a zero-sum game, that, I mean, if they have more vaccines, we have fewer. And we're seeing that again now when it comes to the booster shots and so on, that the question is asked, so if we send more vaccines to other countries, then we are having fewer of them. And that's, in my view, completely the wrong way to think about it. But maybe we can discuss that later. I mean, first I would actually like to give the floor, if they want to my to the president and my fellow board members, if they like. So I think you can actually unmute yourself if you like. Otherwise, I have questions already in the chat. Does anyone want to intervene?
Isabel, thank you so much. This is Christine. Esther, wonderful, and I just want to second your last point. I gave this morning an interview together with Klaus Schwab, and the key points that I was making was exactly the one that you made. I'm just like you, completely baffled by the fact that for $50 billion, the world cannot get its act together when we actually spend $6,000 billion in fiscal stimulus around the world. So I think this is, if we cannot anticipate, all the money that we're putting in stirring the economy and supporting the recovery is going to be wasted one way or the other. So kudos to you for making that point. And I think as many of us should be doing it, whether we are central bankers, economists, and as unreliable as we are, I think our voices matter. So thank you for putting yours there, and thank you for participating.
Thank you so much. You know, if there anything that I can do, that you can do to get Kristalina Georgieva, Gita Gopinath, I don't know, all the women in position of power who understand this point better, I would, you know, anything that I could possibly do to help on this, I would love to, because honestly, baffled is the world. I just cannot understand how, well, like, what is, you Isabel, you're absolutely right. Like, the economics is wrong. The politics is wrong. The moral is wrong. Like, what is right? Like, nothing is right. So, if there is any way, anything that can be done to break this situation, I'm certainly willing to do whatever it takes.
Okay, I might take you up on that.
I would love that.
So anyone else wants to come in directly? Okay, so then maybe I start with a question from the chat. So Angela Madaloni is asking the following question. So how do you see the role played by the big techs, especially concerning the steering of public information, and should their role be regulated somehow?
So certainly they are the platforms are hugely powerful in putting and setting the agenda, in a sense, in what people have in front of their eyes. And what we found with our Facebook study is that people are responsive even to the ads. Because what we did is send these very, very short ads, and we found a huge response to the ads, which shows that, and I think people would probably be even more responsive to some things that have been shared that has been shared in their feed. And the situation we have today is one where the people are increasingly connected only to their echo chamber. So they are increasingly talking to people who are only like them, and receiving messages that are only like them, that are amplified. It is reasonably rare for an effort like the one we made, which is just blasting people across boundaries. With our work with Facebook, is relatively rare that anyone works at that scale. So that shows that that power is huge, and that shows, and when, you know, with great power comes great responsibility, and not one that I think can easily be handled by the companies themselves. So yes, I think there should be more regulation on, in particular, on how information that affects the public good, for example, public health, is being shared on the network. And it's something which they would very much like to take on themselves, but I think it's very difficult. And we're going back to why we need governments. We need governments to do things that are too difficult for individual firms, even as powerful as Facebook, to do, however well-intentioned they might otherwise be.
Yes, I actually think you're very right. I mean, that, like, the social networks, I think many of us thought that all of this would kind of increase information, and that we could actually raise efficiency and so on. This would be kind of the established view, right? And now we're seeing that it can go in an entirely different direction with all the filter bubbles and so on. So I mean that's so I actually very much share your response. Okay, so I have a couple of questions I have to see here. One question from Jérôme Volpe. How can the academic economics profession and policymaking institutions, especially those without democratic legitimacy, so this is us, or without I wouldn't say, but with less, become more diverse and inclusive places and representative of the heterogeneous agents they're trying to address?
It's a great question and an important one, and and there is not going to be a magic bullet or a magic wand, and the responsibility for that doesn't lie only with you. Although it lies in part with you, it lies in being careful in the hiring and promotion decision, also in the culture in the organization, to be aware of all the implicit and explicit bias that exists. But you also are, in some sense, at the end of a chain, which is the training chain. And that's where, for example, we universities have, I think, an even larger responsibility to make sure that the public that comes to you is more diverse and representative. And there, I think we have responsibility on two counts. One is in the admission decisions, both in undergraduate and graduate degrees, that are currently a little bit broken in the sense that they are easily one-dimensional in terms of what they are looking for. And that can and should be repaired. And the other way in which it is broken is that it gives an image of economics which is probably inaccurate. We are letting the sort of perception of economists that I started my talk to, which is basically a white male field interested exclusively in making money, where in fact the field is so much more diverse and interested in so many issues that are of importance to social issues and social policies and so on and so forth. And I remember, for example, when Christine was at the IMF, a really big effort to try to recruit women into the IMF, and an effort from the IMF team saying we are not only interested in budget balance, but the IMF also works on social issues, and it's very important we have women to do that. And at some level, that is a problem that the IMF suffers in terms of image, and the entire profession suffers in terms of image. And I think here it's our job in the university to teach economics in a way that reflects better what already exists in terms of what we are doing and what people like you are doing. And then it will give you a more talented pool to start from, more diverse pool to start from. It's already very talented now, but a pool that will better reflect the diversity of the world, which I should say is essential, both for the profession and for an institution like yours, because economics is a social science and your work is social policies. And how can you accurately represent the problems and the needs of a society without reflecting to some extent the diversity of its constituents?
Yes, I mean, I guess macroeconomics is even less diverse than economics in general. So we're really struggling with that issue. But as you know, we're putting a lot of effort into improving the situation. But I think you're right that we are actually at the end of the chain. So I have a question from Luc on trust. So I think this is related to your yellow vest example. So the question is, what can be done to increase the trust of people that that government redistribution eventually will actually take place? So I mean, because I think this really a very I like that part of your talk a lot, because many times we said, okay, so this is Pareto optimal, so there has to be a way to redistribute, but then it never happened, right? And I think this in climate policies, I think that's actually also a very valid point. So what do you recommend?
Yes, so I think you have to lead with actions. I think people, as you said, there has to be a way, but it has to happen. And often in climate policy, in trade policy, it just doesn't happen. For example, if you look at the US, the trade policy in the US, they really the effort to redistribute to people who were directly affected by shocks due to trade is very, very, very small. The amount of money that is redistributed to people who've lost their job due to trade is tiny. And mostly it goes through channels that are completely inefficient, like disability, instead of going via the trade adjustment program, which actually exists, but has been underfunded to a level of a joke, where, against about thousands of dollars in lost income in the most affected district, they get cents in trade adjustment assistance program. So I think in the way you re-establish trust that the mitigation procedure will happen is by making them happen. And in the case of climate, I'll give you one example where, which I think was successful, is in Indonesia. They used to have a very distortive subsidy for diesel. Completely not redistribution property were bad, and of course it's terrible for the climate. And when they got rid of it, they wanted to get rid of it, which is already something good. But when they got rid of it, they immediately coupled it with lightly conditional cash transfer designed for the poorest family. And the two things were announced as like one and the same program. So it was pretty obvious that the government was not trying to save money from the diesel. It was just trying to rejiggle its assistance to the poorest family by transforming the diesel subsidy into a conditional cash transfer. And that was successful. So that's an example of managing both the actual program of it and the way it is presented that worked. Other examples of other effort of trying to do just the same thing, for example, in India, in Punjab, which is a place that suffers from overuse of electricity and water, and has a subsidy of 100% on electricity, they tried to introduce meters for electricity against the cash payment to farmers, and their farmers can see through it and are still opposed to it. So I'm not saying that it always works to do the same together, but it is a prerequisite, I think, to be successful. In the Yellow Jacket movement, this was missing. There was no effort to do it. And the effort came ex post and in a way that was fumbling, so that the trust had already been lost in a way.
Yes, so I noticed the discussion was so exciting that I lost track of the time. We are 5 minutes over time, but nevertheless, I want to read one final question, which is a very general one. And so this is, what are the main policies that that you would recommend to address the issues highlighted in the talk? So there's a question from Alejandro van der Gote.
That's a bit of a difficult question to end the talk, and I'm going to slightly punt by saying I'm not very much silver bullet kind of person, and as my as you alluded to my plumbing talk, I do think that one cannot answer these questions at such level of generality for the entire world or even for the entire European Union. I would more suggest a change of attitude than a particular policy, a change of attitude or evolution of attitude that can guide us towards the good policy. One is, what I already mentioned, which is I think we do need a profound reform of our social redistribution programs to turn it away from charity that goes with a dose of moral opprobrium towards an insurance system, which is really what it should be. And that's a series of policies decisions to get there, but it's also a change of the way we see it. And the way we treat the people who are exposed to it. And I think that can go a long way into solving a lot of our problems, because it can help with the trust issues. I think it can help with the fear that people experience of any change in their lives because they don't want to be those people who need help. As well, of course, as alleviating the immediate situation of despair that we are seeing even in our rich countries. I do think, again, and kudos to the European Central Bank for the role it plays there, that from the social policy perspective, the COVID-19 pandemic was so well handled. In the sense that in Europe in particular, people were really kept safe during the pandemic and mostly felt it. And I think that's a template for how we move forward. Of course, not with $1 trillion that we were spent, which is something a little bit unique for the moment, but more in the, a pragmatic approach to dealing with the issue.
Yeah, thank you very much for this response. So I think we all agree that overall the response to the pandemic was very well done in many advanced economies. And I think we are all aware that this is still a very unusual situation, and that this maybe cannot be the template for any problem that arises, but that we can learn from it, and that in particular, and I mean we are seeing that all over the place, that we are aware of the fact that inequality, or as then the macroeconomists calls it, heterogeneity, matters greatly. That we have to take this into account also in our macro policies, and I think this is something that is discussed very intensively also in the central banking world, and that is extremely important. You have very much contributed to this whole agenda on inequality, which I think has really transformed economics, and therefore, I mean, thank you again, I mean, for your research, but also for being with us and giving this this inspiring talk. And we are very much looking forward to all the work that you're doing in the future. And of course, we hope that you will be with us for another conference in the future. Thank you so much.
Thank you so much. Thank you for the invitation.
So thanks for everybody for attending. And tomorrow will be another day for the research conference. Bye-bye.
Bye.